Welcome to our Forex and CFD Market Focus Report for Friday, September 13, 2013. Let's go ahead and take a look at our calendar today. Earlier today, we saw an improvement in New Zealand ANZ consumer confidence data. We also saw the carry trade come back in vogue in New Zealand. More foreigners are purchasing Kiwi bonds. We saw an improvement in Japanese industrial production data and capacity utilization data. And we have the Eurozone finance ministers getting together to discuss Greece and Cyprus today. So they are convening in Lithuania. We'll pay close attention to their remarks. We saw possibly the return of some deflationary pressures in Switzerland. We'll go ahead and keep an eye on our PPI data here. We saw improving construction output data in the UK today, which is consistent with the recent improvement in other UK data. We'll get Q2 employment numbers later in the session, and during the North American session, we will take a look for the US PPI. But of course, those data will be overshadowed by August advanced retail sales in the US, and also mid-September University of Michigan consumer sentiment data. The retail sales and sentiment data will be the last data, major data at least, before the FOMC convenes next week to discuss a possible taper of QE policy. Again, the next biggest thing on the calendar is the FOMC meeting next week. The markets anticipate about a $10 billion monthly decline in Fed asset purchases from $85 billion down to $75 billion. Let's go ahead here and take a look at our metals complex. Here we have a chart of gold against the US dollar. You can see this huge daily down bar in gold. That represents a $45 drawdown in the asset. Today the trend has continued. Gold is trading right around the 1311 area and is at its weakest level since around August 9th. Much the same story over here on silver. Silver was down more than $1.40 yesterday. Today it actually reached an intraday low below 2150 area, and silver is trading at its weakest level since the 14th of August. It has been a significant downward move for gold and silver. Let's go ahead and look at the energy complex. We saw a nice move higher, a nice pop higher in Brent crude futures yesterday. They stopped short of testing the 112 figure. A nice move nonetheless. However, today we can see some of those gains have been given back. Of course, in crude, everybody is watching developments in Syria. The U.S. and Russians are meeting to discuss additional chemical weapons disarmament ideas for Syria. Any sort of compromise in which military action is averted in the Middle East will of course result in a reduction in the war or military premia in the metals complex and also the crude complex. Here we have the West Texas Intermediate futures. They traded today as low as 106.57 on an intraday basis, and we will see if they can stay above this 106 area, which has been a relative support level for the complex this week. Let's go ahead and take a look at our FX market activity. Here in our US dollar activity index, we can see some marginal strength for the dollar across the other currencies. A little bit of an upward trend here for the dollar. Looking at our euro complex, we see the euro a little bit underwater today, so a little bit of a downward trend for the euro, but not much of an intraday trend. Japanese yen, also not too much of an intraday trend. It's a little bit on the negative side. Of course, in Japan overnight, we had actually Japanese officials speaking about the planned increase in the Japanese retail tax, consumer tax. That will be decided by Prime Minister Abe on October 1 and would go into effect in April of next year, if in fact it is decided. Here we have the British pound has a nice intraday trend. We can see that it caught a bid from the better than expected construction data. And of course we have the Swiss franc a little bit below zero. Not much of an intraday trend here in the Swiss franc. That, however, is not the case with the Australian dollar. The Australian dollar is again sharply lower today across the board. Not as sharp as yesterday, yet the Australian dollar does have a continued downward trend, a pullback. Canadian dollar has moved from positive territory in recent days to negative territory. There's a little bit of a negative bias here intraday for the Canadian dollar. Finally, the New Zealand dollar, its upward trend has continued. We can see these peaks here, and those indicate that the New Zealand dollar has had a nice upward trend. Of course, we saw the better than expected sentiment data, confidence data out of New Zealand overnight. And of course, yesterday, RBNZ kept rates unchanged, but signaled that the likely trajectory of interest rates is higher, probably sometime next year. Let's go ahead and take a look at 5 or so charts. Here we have a chart of the US dollar against the Japanese yen. We can see that today's intraday high for the US dollar is right around this important 61.8 retracement level. That's this red horizontal line we're looking at here. That comes in right around 99.92. If we are able to get above this level, we would expect a test of this Fibonacci extension area coming in around 100.40 in purple, followed by a test of perhaps the 101.26 area up here. Let's go ahead and take a look at a daily chart of the euro against the Canadian dollar. We can see for 5 consecutive days that this 137.60 area has been toppish. This has been resistance for this pair, this cross rate. We can see, of course, today we have an inside bar so far in this cross rate. And if the euro is able to move above this area, we would, of course, target our next upside Fibonacci area, which would come in around 138.30. Keep in mind we have a yellow uptrend line here, which may be providing support if the euro does come off further. Here we have a very interesting chart. This is a chart of the British pound against the Canadian dollar. We can see that the 38.2% retracement area was very, very strong technical support for this cross. It almost perfectly tested this area today. That came in around right at around 163 figure. And we can see that the pound stopped short of testing this yellow downtrend line. If we are able to move higher from current areas, we would expect a retest of the 163.80 area, followed by a possible test of this red horizontal retracement line. That represents technical resistance right around 164.30. This is a very interesting chart of the Australian dollar against the New Zealand dollar. It is near multi-month lows, and we can see on this weekly chart with this blue down arrow that last week the Australian dollar almost perfectly tested this key technical retracement area, coming in right around 116.66. Of course, this week the cross rate has moved lower, as evidenced by the Reserve Bank of New Zealand interest rate decision and the Aussie Kiwis reaction to that decision. Let's go ahead and look at this pair on a daily basis here. We see the pair was not really able to get above the 113.96 area here, and any further downward move we would expect a test of the 112.28 area here. Finally, our final cross rate today that we want to take a peek at is the Aussie Swiss franc daily chart. Yesterday we saw some very strong technical moves in the Aussie. It was hemmed in between some key resistance areas here. Today we see an inside bar with the intraday high on the Aussie Swiss cross coinciding with the yellow downtrend line here. Any further weakness, we would expect a test of the 85.82 area, possibly moving down to the 85.04 area. We thank you very much for watching our Forex and CFD market focus report for today.